What's up guys, Zoeb here from OneGlanceTrader.com, and in this video I'm very happy to be sharing with you how I can achieve better trade entries using divergence. Now most of you I would probably imagine that are using some indicator rule-based system for your entries and your take profits. Now by doing that, one of the drawbacks of using that type of strategy is that you wait to get a confirmation before you can enter. And what generally happens when you do that is that your trade is quite late into the game and you can't capture as many pips as you would like, or your stop loss needs to be a bit more bigger than you would like. Now, what I'm going to share in this video is how I use the combination of lower time frames and divergence to be able to pick and be more precise with my trade entries. Now, before I do that, I'm going to quickly go over what divergence is and what divergence trading is. So, oscillators such as the MACD, the RSI, stochastics, all those kind of good oscillators that we all use inside our trading, they're all determined by price. So whatever price is doing, when price makes a higher high, the oscillator in theory should also make a higher high. However, there are times when the price and the oscillators disagree, and that's known as divergence. Now, there are two types of divergences. There's regular divergence, which are generally lead to trend reversals, and hidden divergence, which are trend continuation patterns. So I've picked up some images out of Baby Pips just to give you a quick visual pictorial overview of what that kind of looks like. So starting with regular divergence, you've got regular bearish divergence. So the top here is price and at the bottom is your oscillator of choice. You get regular bearish divergence when price starts making a higher high and where the oscillator should also be making a higher high but actually makes a lower high, therefore gives us a potential indication or an early warning system that price can potentially reverse. And then the opposite is for regular bullish divergence. So price makes a lower low and the oscillator makes a higher low, and therefore this downtrend potentially could reverse and start becoming an uptrend. And then you've got hidden divergence. So this is where, from a bearish standpoint, is when price makes a lower high and the indicator makes a higher high, and therefore price will continue to go towards the downtrend or short side. Then you've got hidden bullish divergence, where that is where price makes a higher low and the oscillator is making a lower low, giving us a strong indication that price wants to continue to make higher highs and start an uptrend. So that's just an overview of divergence. Now, when I trade divergence, the key question I normally get asked is when do I enter the trade? Now, firstly, in terms of the two sets of divergence between between regular divergence and hidden divergence, I personally trade nowadays hidden divergence, and the main reason for that is that I've kind of evolved my trading in becoming a trend trader, and therefore I like to trade with the trend. And one way I like to get into a trend is by looking for hidden divergence opportunities, which I'll go through in this chart in a second. So firstly, a lot of people ask me what oscillators do I use to kind of spot hidden divergence or any type of divergence, and I like to use the MACD. And the reason why I like to use the MACD is because it is a crossover indicator, and it's those crossovers is what I use to kind of enter my trades. Another reason why I like to use the MACD, I just think it's visually the best kind of oscillator to use. I just find it easier to see, and I actually use a linear weighted moving average MACD, which I'll link below, which you guys can download for your MT4 terminal, and it's just my personal preference. And again, you can use the RSI, stochastics, whatever you want really. It doesn't really make that much difference, but for me personally, I like to use the MACD and the linear weighted moving average MACD. So apologies. So just to give you an example here of this hidden divergence or bullish hidden divergence example. So we've got prices inside an uptrend. So as you can see, price makes a high here. The oscillator also makes a high. It pulls back, and the oscillator makes a low, and then the oscillator makes a higher high, and then so does price, and then price pulls back to make this low, and it continues the trend by making a higher low. But as you can see here, the MACD makes a lower low. So if I refer back to this image on the previous slide, is you've got price making a higher low, which you can see by this orange line here, and the oscillator making a lower low, which you can see from this orange line here. So you've got hidden bullish divergence. Now the question is, now that I've spotted that, is when do I enter the trade? So like I mentioned before, the reason why I like to use the MACD is I like to wait for when the MACD crosses over. So when the MACD crosses over there on the close of that bar, um, on the close bar, it creates that crossover, and it happened at this kind of bar over here. And then I would enter the long trade, and then I would manage my position based on my reward to risk, whether that's 1 to 1, 2 to 1, or 1 to 1 move stop to break even, and then just ride it and do a trailing stop. There's many different exit strategies, but at the moment all I'm talking about in this video is my entry strategy. So that's what I do, is I wait for that crossover to come in, and I get into the trade. However, when doing that, is like I mentioned at the start of this video, sometimes that crossover happens a bit late, and therefore I kind of miss the bulk of the move. I'll give you an example of that on this slide over here. So this is an example on the USD share 5-minute chart, and this is an example of hidden bearish divergence. And again, I'm waiting for the MACD cross. So we've got price making lower highs, and the MACD making higher highs. Now, once I've got that, is I then wait now for the MACD to cross, which happened at this bar over here. Then I'll go short, and price does go in my favor, and depending on my reward to risk, whether this trade was a profitable outcome. But I'm just highlighting the issue is that I missed out on all these potential pips over here because I didn't get the signal until the end of this potential bar over here. So therefore I've missed the kind of the kind of top to go short. Now, and that's why I'm trying to give you an example of where waiting or having a crossover system or an indicator rule-based system, it, there's an opportunities where you'll get in late. Not all the time, but majority of the time you will enter the trade in late. So how can we use divergence and other tools in our toolkit to be able to get into the trade earlier? And this is what I'm going to do. So I'm going to use the same example. So it's the exact same chart as this. I've just shortened it slightly, and you'll see why in a second. I'm going to go through how I now trade hidden divergence and try to get better trade entries. So the first thing I do is I wait for potential hidden divergence. So the way I do that is once I can easily establish a trend, as you can see here, makes a high here, high there, and then price goes down, makes the low, and obviously it's covered by this Google presentation bar that I can't get rid of. Price then starts to go up. Now what I do is I draw a line again on the MT4 per terminal just above that high. Now what I'm waiting for the MACD to break that trend line effectively. Once it breaks that trend line, and let's say we're at this circle here, which is this bar over here. So none of this has happened. We're at this bar here. There's two things that could happen. The first thing could happen, price could continue to go up and make a higher high, and therefore this wouldn't be hidden divergence because the price and the oscillator are in agreement. Or what could happen is what's happened in the actual example is that price could turn and continue in the way of the trend. At this stage, I don't know what's going to happen. I generally would wait for the crossover to confirm that I've got a higher high and a lower high here. So imagine we're at this section over here at this green bar. Now I know that there's a potential opportunity for hidden divergence because the MACD is now going to make a higher high. It's just whether or not price will make a lower high to give me hidden divergence or a higher high, which I don't get into the trade. So what I do is once that happens is that I drop down a time frame or two time frames. But because I'm on the 5 minute chart, I've only got one more time frame to go down, which is the 1 minute chart. So what I've done is I've taken this area here that in this box in orange, and I'm showing you what that looks like on the 1 minute time frame. Now, as I said, we were at this bar over here, which is this bar here. So this is, and again, I probably should have drawn this on the chart, but it's this bar here is where is where is where price or the MACD broke the previous high on the 5 minute chart. So we're at this stage here, and what we're looking for now, because we're looking for a short trade in the continuation of the main trend, or my trading chart as I call it, the 5 minute chart, I am now looking for bearish regular divergence. So that is when price is making a higher high and the oscillator is making a higher low. And as you can see here, is we are now getting a higher high, lower high. And what we do then is then wait for the MACD cross to confirm the regular bearish divergence, which is over here signified by this X over here, to go short in my trade. So this X over here is this area on the 5 minute chart over here. Now, you might have to replay that back because I've just given you the strategy that I use to get better entry signals. Now, just to show you how different that those two entries were from the previous entry where I got in at this bar over here on the cross, on the crossover, to when I got in on the cross on one time frame lower on regular divergence, is you'll see that the gap between here and here is 11 pips. Now that means that I caught the majority of this downward move here, which is pretty much that 11 pips there of pure goodness really. And I really hope that makes sense because this is the bit there again, you'll need to go through this. It's quite an advanced technique, but when you get to grips with this technique, this will revolutionize your entry setups. So you can see in the example that I showed is if I waited for the crossover, I would have got in here. But if I waited until this bar here where price broke the previous high, I drop down to the next time frame down, in this case the 1 minute chart, and instead of looking for hidden divergence, I'm looking for regular divergence in the same direction of where I'm trading hidden divergence on my trading chart, which was the 5 minute chart. And I totally understand that might seem quite complicated, so please go back and watch this video because you need to understand that concept. And just to kind of clarify it in kind of word terms, so what you do if you're a hidden divergence trader, just like in the example I just showed, you wait for hidden divergence to potentially come in, and that's when price breaks the previous high. The oscillator breaks the previous high. You then move down one or two time frames, and then you start looking for regular divergence. And when you get regular divergence, you wait for the MACD to cross over, then you place your entry on that lower time frame chart, and then you go back to your trading chart and you manage the trade as you would normally if you were trading your 5-minute chart in the example there. And then you've got regular divergence, which is the same thing, but just the opposite. So if you're a regular divergence trader and you're kind of a trend reversal trader, you look for when potential regular divergence could occur. So if you see the oscillator disagreeing with price, you draw your trend, you draw your horizontal line, you wait for price to break that line, you then go down a couple of time frames and then start looking at hidden divergence. And when you spot hidden divergence, you wait for the MACD cross, and then you enter on your lower time frame chart and then go back up to your trading chart to manage that trade. Now, again, I really wish I could spend some more time with you on this, but I want to try to keep this video short. I will look to go get some other examples in future videos to really kind of hone in that kind of concept. So please go back and watch this video a few times so you get the examples. Have a look at your charts, try spot regular or hidden divergence on your trading chart, drop down a couple of time frames, and then look for the opposite type of divergence that you're trying to trade on lower time frames. And trust me, it will absolutely revolutionize your trading, and you'll get better entries, therefore better reward to risk, and therefore a better return on your trading. So really hope you enjoyed that. Check out my other divergence videos. The thumbnail should be appearing on the screen now, and I should see you in next week's video.